We know that Wall Street has made an art of high frequency trading and rank speculation that's fattened the wallets of a few while putting everyday investors at greater risk. And the market events of last January brought attention to Robinhood's practice of selling user data to hedge funds that do high frequency trading. As has been mentioned today, one way to deal with that and cut down on high frequency trading and its risks to market stability would be to place a small fee, say 0.1% on these Wall Street transactions. It would generate billions of dollars that we could invest in greater opportunity for other Americans. It would reduce wealth and economic inequality and reduce volatility in the market. That's why Senator Brian Schatz and I plan to shortly reintroduce our bill to impose a financial transaction fee, a high roller fee. And let me start with Ms. Robichaud. I know you mentioned this. Could you just elaborate a little bit more on, first of all, the risks of high frequency trading, and then second, how a financial transaction fee of the kind I'm talking about could reduce that and be a benefit?
Certainly. Thank you so much for the question, Senator. I'm happy to hear that you'll be reintroducing that legislation. In terms of the risks, I mostly see them as systemic. When we have that classic recipe for market disruptions, what we've seen time and time again, whether it's the Great Recession or the flash crash, is that high frequency trading simply exacerbates that. In terms of how the financial transaction tax actually shows up for regular Americans, if you'll allow me, I'd like to use myself as an example. I was born into rural poverty in a segregated town. I grew up in an all-Black family. We were very poor. I've been homeless multiple times as a child. Thankfully, I graduated at 15, went to college. Any of the extra money that I've made in my entire working career has gone either to my extended family or back into my business. But at the age of 42, I have managed to save $100,000 in my retirement account. I was looking at my average trades. My average trade size is about $9,000 on my own account. If the financial transaction tax that you're talking about of 10 basis points or 10% of 1% were to come about, that would cost me about $9 per trade, and I have about 20 trades per year. And this is very similar to the situation that is true for most of my clients. $9 is less than the $9.95 that the discount brokers were charging when they were actually charging trading, when they were charging the commissions for trades. And so to me, that seems very reasonable as a small amount of insurance, a price that I pay as a participant in an orderly, fair, and efficient market. And one of the ways that I know that that's happening is because it's significantly slowing down the non-human, algorithmic, high-frequency trading that's caused so much damage.
Well, I appreciate that. As you say, it really would create a disincentive, a financial disincentive for that high-risk conduct that puts other people in the market at risk. Professor Ghilarducci, you also mentioned this. Could you just elaborate a little more? Because this is going to be a big debate, I think, as we consider different options for revenue. This will be an attractive one because in addition to raising revenue, it has these other benefits. Could you just talk a little bit more about that?
Right. I think the economic research has been done. It's an idea whose time has come, especially if you reintroduce your bill. The costs and benefits have been evaluated since James Tobin at Yale in the 1970s proposed it. And economist after economist have rerun the numbers. And if it's too high, it will have bad effects on long-term savings. If it's too low, it won't have any effect. If you get it just right, and actually 0.1% is about right, thank you for reminding me that what it does is it shifts from high frequency trading, it changes behavior towards more long-term holdings, exactly where all of us want people to be with their stocks. So I think you're on very solid ground in terms of the academic research, that the costs are too high of a tax and the benefits of just the right one encourages wealth accumulation.